Hello everyone. Today we're going to have a brief market recap, then talk about President Trump's meeting with Prime Minister May, U.S. fourth quarter GDP, and the U.S. durable goods data. This is Marshall Gittler, head of investment research here at FXPRIMUS, bringing you my opening market comment. Well, the dollar is opening higher this morning in Europe following yesterday's better than expected U.S. economic indicators. The biggest mover of the day is the yen, which is down across the board after the Bank of Japan bought bonds to keep Japanese yields from rising. They did this even though Japanese inflation beat expectations. Now, the widening yield spread between Japan and the rest of the world should promote outflows from Japan and thereby cause the yen to weaken further. Gold fell yet again as investors moved into U.S. stocks and bonds, but oil rose after Algeria's oil minister added his confirmation that OPEC will reach its target for cutting output. The highlight of today will be not an economic indicator, but rather a crucial political event. U.S. President Trump's first meeting as president with a foreign leader. He meets with UK Prime Minister May. Now, President Trump's eager to show that he isn't just a protectionist, anti-trade person, while Prime Minister May is eager to cement Britain's special relationship with the U.S. ahead of Britain's exit from the EU. So I'd expect to hear some relatively happy noises from both sides after the meeting. That could lift sterling. Outside of that, all the data today concerns the U.S. U.S. fourth quarter GDP is expected to be somewhat lower than in the third quarter, but still above what's considered to be the potential growth rate for the U.S. Furthermore, there's a good chance the figure could beat estimates after yesterday's advanced estimate of wholesale inventories for December came out much stronger than expected. Now, a positive surprise for this number could be positive for the dollar. On the other hand, the core personal consumption expenditure deflator, the PCE deflator, is expected to slow. This is the Fed's preferred gauge of inflation, and so, in theory, it should be important for the dollar, but to be honest, nobody actually pays it much attention. A slowdown further from the Fed's 2% target should in theory dampen the dollar, but it probably won't, I admit it. Now, at the same time as these two figures are coming out, the U.S. durable goods figure December is going to be released. The big drop in aircraft orders that resulted in a plunge in the headline figure in November is now past, and so the headline figure should show healthy growth in orders. Further down, however, the number becomes less robust. The weak bottom line figures that the market expect to see in today's durable goods figure could dampen hopes of a Trump investment boom and somewhat counter the GDP figure. This is Marshall Gittler, head of investment research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.